Welcome, everyone. I am John Ryan, and I'm with my co-host Steve Merrill. And this is the financial trading and futures type of show. I think I'm going to have to come up with a different name, Steve. Then this doesn't flow right. We'll work on that later. But Steve, welcome to the show. How's everything going over at WagerTalk for you?
Yeah, doing well, doing well. Yeah, we'll need a little bit of a better name, but it's the content that matters.
That's true. I just kind of slipped because I've been going crazy today. But anyway, let's get right to it, shall we? So here's the S&P 500. And if you look closely, we did have an engulfing candle on Friday, which is what I was looking for from the last show. And now we're going down pretty hard right now. We have fresh lows in the afternoon, down 45 points in the S&P 500 futures, which is usually the equivalent of about 400 to 500 points in the Dow. But this type of drop is related pretty much to Nvidia, and Nvidia is getting crushed. And I'm going to pull up Nvidia before we get back to the S&P 500 here. You can see it way over here. We'll enlarge this here. You can see that we're down. It doesn't look like much because this has been a meteoric rise. The 52-week low, I believe, is around $210 a share, and we're trading at 680. It's down 45 on the day, 6.3%. And this market cap is one of the biggest of the S&P 500, Steve. I think it ranks fifth. It's right up there with Google. In fact, I think the market cap is about the same as Google is right now, despite this incredible drop. So I don't know if this is the beginning of the correction or not. I'm more concerned about whether, for example, what do you think about Nvidia being such a superstar stock over the years, and now all of a sudden it's getting just absolutely crushed? Do you think this is going to happen to some of the other tech stocks, like semiconductors, for example? Most of the brokerage houses, the big ones, are still advising overweight. I'm just wondering if these stocks have run the course of time now, and the cycle is due to correct a little bit here over the next 3 to 6 months. What do you think about that?
Yeah, the guidance calls and stuff I think are so day late, a dollar short. It's definitely going to turn before they turn. Obviously, they're all reactive, and something to keep in mind also. The S&P had a huge year last year, up 20 some percent, but the Nasdaq was up over 40 some percent, basically double as much, and that's the more tech heavy index. So if there's ever one that's due for a pullback, it's the Nasdaq, which would be the tech companies, and they are going to affect the S&P as well, because like you said, a lot of that top 5 or top 7 that we always talk about, the S&P 500 is really the S&P 7 plus 493, and you're talking about Apple, Google, Nvidia, Microsoft now with the AI stuff is as big as anyone. So yeah, if you can guess which way tech is going to go, you can probably guess the way the markets are going to go as well.
And I'm going to put up some Fibonacci numbers after the show. I'll put that on the timeline and here in the comments section too, because if you own Nvidia or you wanted to buy Nvidia, the 38.1% retracement of the most recent move to the upside is probably going to be an area that a lot of other technicals are going to converge on. So wanted to provide the initial support. And if you're a long-term investor, there does become a day where you sell out of that stock because the story has changed. And obviously with Nvidia, the story has changed a bit. And this is kind of concerning to me, as I said before. Let's take a look at the S&P 500 today. We went over that. I also put out that tweet you saw where I bought the 458 puts on the quarterly March. So with options, there's weekly expirations, and then there's the quarterlies. The quarterlies are obviously what was the only ones offered in the marketplace back in the 90s. And since then, we've had weeklies for as long as I can remember. I generally like to play the quarterlies because they will have the biggest amount of open interest and volume as we get closer to March. And it's always the third Friday of the quarter that these guys expire. And we get triple witching situations on those days. That used to be big moves out of nowhere back in the day, but now it's kind of more offset by other trades that are going on at the close. But nevertheless, that is where I'm at. The price was $1.15 or cheaper, and I think they're trading roughly like at a buck 30 currently. So not that that's a big gain in this type of trade. We're letting it run. The stop loss would be if we take out the previous high that was established on Friday. And if that happens, then we'll cover and we'll look for the next opportunity. But my plan is defined. I guess that's what I'm trying to say, Steve. You and I have plans before we execute. And just like we do in live sports betting, you have to have a plan going in pre-flop. Otherwise, you're probably going to lose money trying to bet live in-game on a whim. Like watching a game. Oh, that guy looks great. Well, it goes in flows, just like buying high and selling low, or buying low, selling high is kind of the same thing. You want to sell into the strength. Anything else on the S&P here, Steve, before I move over to natural gas?
I mean, if you just look at the overpriced, the value still, the earnings per share is still higher than historically. The CAPE ratio is higher. I mean, if you really project it out over the next 10 years, like a lot of experts have said, like an average 2% return, real return on the S&P, and everyone thinks you get 10% on average. So I'm looking for a reason to be bearish on the stock market. And when it hits an all-time high like it has recently, there's going to be a pullback. And, you said, is it the beginning? I don't know, but I definitely don't think there's a reason to be jumping in long right now.
Yeah, yep, and I'm with you on that 100%. So next is natural gas. We talked about that. Well, we talk about it every show because it's a very intriguing market here. And as we noted last week, you don't catch a, what was that saying again, Steve?
Yeah,
I
don't
like
catch a
hearing you
falling
say it.
knife. I mean, the risk reward is still really good to the upside on this, but that is a falling knife, as you can see right there on the right. And when it breaks below that key support level, which it had held and it bounced off of, I mean, it's noticeable. You can see exactly where that level was, where the lows were over on the left side there. It had bounced up here. And I mean, it gapped right through it. And now that'll be the near term resistance to the upside. It's nowhere near that right now. And until it breaks out of that, I would not be long. But when it does break out of that, maybe in a couple months, keep in mind this was still at 10 just a year ago, and it's down to below 2 now. So you don't have to try to pick the bottom right now. And if if you got it wrong earlier, this was your stop loss, and it broke right through it, and that's why we've seen so much downside since. Because anybody that was long probably had that floor as their stop loss right there, and now it's it's off to the races down.
Yeah, I think it's way too early to tell, but this might end up being the left side of a saucer bottom. So imagine a plate in your on your table and take a look at it, and the shape of that plate, depending on how deep your plate is, this might be the left side of it right here. But it's way too early to tell. We have to get some kind of bottom in here over the next couple of weeks first. So as the saying goes, you don't catch a falling knife, and probably Nvidia is a falling knife now because that stock could go just about anywhere, being down that much, because that's going to get the public's attention. And the market has been very complacent. Sentiment. Let's go back to the S&P for 1 second. Look where the sentiment has
Yeah.
been running at 88, and we had talked about how this is calculated, but we'll save that for the next show. And maybe I'll even do that as a separate show just to have it in the library for future reference. But it's been, way up there where there's no fear. Everything's great. The economy may not be great, but people who own stocks and institutions, things are just, very rosy. And this is where you do get these sudden moves. And unfortunately, like a lot of the media platforms, 2 weeks from now, if this ends up being a top, they'll then tell you why this was a top. But what we like to do is be able to see it happening right before our eyes, because the picture tells you a million words. They say 1,000 words is the same, but in the candlestick, it's a million words, in my opinion. And you look at the story, and the story is right there in front of you. Engulfing candles at the tops are a big time warning sign. Now, maybe this doesn't work and we'll go to new highs again. But every time we do get an engulfing candle at a high, especially an all-time high, I'll be looking at buying out of the money put options in case there is a sudden precipitous drop. A lot of times these things go in a day, and they can easily drop 1,000 points in the Dow, maybe even 1,500. And percentage-wise, that's nothing nowadays. Back in 1987, it was the end of the world. But That was a long time ago. What other stock do you want to talk about, Steve?
Anything you want to throw up there? I mean, I think that's an excellent point. Here again, the risk reward to the downside is where it is with that natural gas is the exact opposite. As we talked about, natural gas is not a stock. It cannot go to zero. It's a commodity which people use on a daily basis. So, I mean, you're only talking about 1.5 points that it could possibly go any lower, and that almost would be zero. Whereas it could go infinitely up, and it was at 10 just a year ago. So you're talking about like a 6-to-1, 7-to-1 risk reward ratio that's very realistic in this one. But with that said, we're not trying to time the bottom. The other thing I'll say too is the fact that we had that little bit of a saucer bottom a few months ago, where it did go up for a couple weeks and then came back down. You can
Yep.
almost said that one failed. I don't think it'll fail again, and it's just going to be such a great risk reward buy. And you can still set your stop loss below like one something, but you're risking so little for an infinite upside on this. Even if you wanted to get it now, I mean, I don't want to try to pick the bottom, but the fact it's gone down this steep, you probably could start trickling in here every day or so, or every week or so, just buy 10% a day, and just put a stop loss in there, and you probably really be dollar cost averaging at the bottom.
Yep, I agree. What I'm going to do here, that's natural gas options. What I want to do here is pull up. What is it that I want to pull up? I want to show the Dow. Actually, I'm going to show this. If you can read this, I know it's very, very fine, but if you have big monitors, I'm sure you can see it on the show here. This is ranking the market caps of the largest companies in the S&P 500, obviously the biggest market caps of companies in the world. And right now, Microsoft is $2.975 trillion. Apple is $2.790 trillion. Then you have Google, then Amazon, then Nvidia. So Nvidia is down 42 on the day, 6.5%, but it still has a market cap of 1.7 trillion. But imagine how much market cap Nvidia has lost. It's a big,
Do you
big.
know what percentage of the S&P it was like heading into today?
What it was on Friday?
Yeah, like what percentage of the overall 500 it made up of the cap?
Oh, it's a big number. It's if you add it up, 5.6, 7.2, 8, 9, 10. Well, that's basically $13 trillion in market cap among the ones that are above 1 trillion. So that's Meta, Nvidia, Amazon, Google, Apple, and Microsoft. That would be a big percentage of the total, and I'll calculate that later on. Pretty easy to do, but you flip this around and look at all the companies. The smallest one is this Kimco Realty. There's McCormick, 18. That's 18 billion. Now Nvidia's lost probably 10 times, 20 times that just today. So
So
it
what was the
puts it
total value, John? Because I just looked up that the S&P market cap's right under 42 trillion. So how much was Nvidia?
42 trillion. So let's see, we're looking at 2.97. Let's see, Nvidia is 1.686 trillion.
So say 1.7 before it fell, probably.
Oh, it's probably more like 1.9.
Okay, so we'll say it was 1.9. So it was 4.5% of the entire index.
No, do use 1.8.
So
So it's
1.8.
4% anyway.
So it was 4.2% of the index. So it's over 4% no matter how you cut it, even at today's value. So it's 1/25th of all 500 companies. I mean, it's 1/25th of the index out of 500 companies. So it's substantial.
Yeah, and this if you're not involved with Nvidia at all, either long or short or whatever, you just let this go because this could go anywhere, and people might get lucky and they'll get the bounce or they'll um, somehow make a successful trade. But the volatility of this is, I think, should be avoided in my opinion, and you just let it go, let it watch, see how it trades, and then when the patterns shape up again, maybe it will present itself as a great buying opportunity. But when you lose this much in a day, it's never a good sign, no matter what the name of the company is.
Yeah, when it's 4% of the S&P 500 index and it's down that much, that's not a good health indicator for the index in general, in my opinion. So because these are,
Yep.
they're cap weighted for a reason. That's considered one of your top 7 holdings, basically. If you're the S&P, that's like one of your 7 favorite bets right now, and it's down like that. And it's near an all-time high. Yeah, the risk reward is just awful. There's just no reason to be putting new money into the long right now in the S&P, and a lot of people do that on a weekly and monthly basis. I just would not be doing it.
And even Broadcom here down 22. That stock was recent high 12.95. It's now 12.23. That's lost quite a bit of market cap too today, and that's a $572 billion company as we speak. So there's more market cap, kind of out the window. Mastercard is down 16 points to 451. That's another pretty big loser. And Netflix is down 12. That's comparatively, that's not a big deal. But
But most of those are around the
Apple is
1% of the total index. So I mean, it's 500 companies. Technically, you should be 0.2%, right? You should be 1/5%. But now they're all
right.
over 1%. Nvidia is almost 4%. So it shows how top heavy the index is. So when you see weakness in these companies, it's not a good sign, in my opinion.
It looks like the semiconductors are getting like hit. Advanced Micro here down 9 to 164. Pretty big volume, 46 million. Tesla 76 million traded, which is 25 million more than Nvidia. I would think the direct opposite, that Nvidia would be the volume leader given this
Correct.
news, but not the case.
Yeah, and volume's usually the truth indicator. So the fact there's less volume, maybe it's not as big of a scare. But normally, if you see a big move on heavy volume, it's pretty legitimate.
Yep. So I know you have a basketball show coming up. We're the two guys that do financials and we do sports and sports betting, and we love both of them, I think, equally as much. But what's going on at 2:00?
Yeah, I got the WagerTalk college basketball show here in a few minutes, breaking down some of the biggest games Tuesday. I love the Tuesday night card. Many of the weeks there's no extra games. Tonight there's one game on the extra board, so it's basically all the big blue blood power conferences playing on Tuesdays, and it's been a excellent night of the week for me for years as far as picking winners. I've got 2 free plays for the show, and then also 3 best bets at WagerTalk.com, a 3-for-1 special tonight, along with a bonus free play there as well. So check it out. Steve Merrill, WagerTalk.com, and you can watch the show's 24/7 archived WagerTalk TV here on YouTube.
Awesome, Steve. I have a special for today and tomorrow. Only $200 covers you through March Madness. I'm ranked 4th out of about 100 cappers on many different sites, like sportscapping.com, for example. So seeing the card pretty well. I think if you pick either one of us, I confidently feel that you'll end up doing pretty well. So it'd behoove yourself to get both of us, and that should be a pretty fun time for March Madness. But anyway, thanks for joining the show, Steve. Have a great time on the Wager Talk college basketball show and NBA show at 2:00, and we'll talk to you soon.
Great. Thanks, John. Talk to you guys.
Bye.